Sofi stock upgrades and Palantir stock earnings news. Analysts are changing their mind on these stocks. Hey there, welcome back to our channel. Today, we're diving into some exciting market updates that have tongues wagging and investors reevaluating their strategies. I'm talking about none other than the intriguing world of stocks, where Sofi and Palantir have been stealing the spotlight. In this video, we'll be dissecting 6 eye-catching articles that have been making waves in the financial realm. From Sofi's impressive recognition on the CNBC World's Top Fintech Companies 2023 list to Palantir's roller coaster ride of ratings, there's no shortage of twists and turns in this narrative. Stay tuned to get the lowdown on why analysts are rethinking their positions on these stocks and what it means for your investment strategy. Let's dive in. Sofi named to CNBC World's Top Fintech Companies 2023 list. First, the exciting news on the horizon: Sofi Technologies. The digital personal finance powerhouse just earned a spot on CNBC's illustrious World's Top Fintech Companies 2023 list. This prestigious accolade, brought to you by CNBC and Statista Inc, recognizes Sofi's relentless dedication to revolutionizing personal finance. Anthony Noto, Sofi's CEO, beamed, "We're stoked to be featured on CNBC's inaugural World's Top Fintech Companies list. This spotlights our growth and commitment to equipping our members with tools for smarter spending, saving, investing, and protecting." Noto emphasized how Sofi's digital-first solutions align with the evolving needs of today's consumers, especially after snagging their bank charter in 2022. Standing tall in the Neobanking category, Sofi soared into this coveted list, backed by their national bank license, which has enabled them to adapt nimbly in a fast-paced landscape. Their checking and savings feature, offering an impressive annual percentage yield or APY up to 4.50%, has resonated with members. Speaking of members, their count surged by over 44% year over year, reaching 6.2 million individuals benefiting from their comprehensive suite of financial products. This recognition, announced on August 2, 2023, solidifies Sofi's position as a fintech force to reckon with. CNBC and Statista crafted this list meticulously, weighing various KPIs from a pool of 1,500 companies through publicly available data and applications from over 100 contenders. Sofi's ascent to the top showcases their commitment to shaping the financial future. Mizuho Analyst maintains buy rating and increases price target for Sofi Technologies. On August 2, 2023, Mizuho analyst Dan Dolev delivered some good vibes. He's sticking with a buy rating and upped the price from $9 to $15. That's a solid boost, right? Dolev isn't alone in the optimism game. Other experts are on the bullish train too. Addressing the skeptics, Dolev shut down the notion that Sofi can't sell its loans. He's confident they can rake in about 6.4% annualized yield by keeping him. This move strengthens Sofi's market position and competitive edge. Mizuho's thumbs up signals growth ahead. Truist Financial increases Sofi Technologies' price target to $16. Now, let's dive into some stock analysis. Sofi Technologies is creating a buzz as Truist Financial upped its target price to $16 from $11, indicating a potential 54.59% upside. Their buy rating signals confidence in its future. However, the experts are divided. Morgan Stanley shifted to underweight from equal weight. Piper Sandler went from overweight to neutral. And there are more mixed opinions from Stephens, Compass Point, and BTIG Research with a $14 target. Switching gears to Sofi's financials, they beat July 2023 earnings estimates, posting an EPS of $0.06, with a robust 37.3% increase in revenue from the previous year. Their member base is growing. now boasting over 6.2 million individuals enjoying their financial products. Insider actions are in play, with shares sold by Aaron Webster and CMO Webb Lawrence Stafford. Institutional investors are also making changes to their Sofi holdings. Truist's bullish stance highlights Sofi's potential, but diverse ratings persist. This stock is sparking intrigue and debate. Palantir. Be fearful when others are greedy. Rating downgrade. Now, time to dive into some insights about Palantir Technologies Incorporated. The buzz is all about its upcoming second quarter earnings report due on August 7, 2023. Recently, shares have been on a roll, riding the wave of optimism from Wedbush Securities, who threw out a $25 price target while highlighting Palantir's AI potential. But here's the twist. I think it might be time for a reality check. Back in June, people were gung-ho about Palantir's AI prospects and integration capabilities. They were looking solid and was rated a strong buy. The share price took off, skyrocketing over 200% in 2023 alone. However, now that we're soaring high, it might be time to consider taking some profits off the table. Why, you ask? Well, Palantir is expected to roll out some robust Q2 earnings, maybe even a third consecutive GAAP profit. Yet, all that goodness seems to be priced in already. As much as we're a fan of the AI market and Palantir's role in it, the stock's valuation is starting to look a tad frothy. Bear in mind that Palantir has already been through a transformation, moving from GAAP losses to profits, especially in the commercial segment. That's a big deal, but here's the kicker. Their shares are now trading at quite the premium, with a price-to-revenue ratio that's hit a one-year high. That's almost double the usual. The downside? Well, the sky-high valuation might already have factored in all the great news we're hoping for. Plus, Palantir's share price recently got a boost from Wedbush Securities' AI praises. This might sound like good news, but it's also a bit of a red flag. Too much enthusiasm sometimes leads to irrational decisions. Now, before you hit that panic button, I'm not saying Palantir is in trouble. We still believe in its potential, especially in the AI realm. But with such a huge price jump and all the optimistic chatter, it might be worth considering locking in some profits before the earnings report. PLTR warning. Wall Street loves Palantir. Why you should guard your heart. Now, let's talk Palantir, a stock that's been riding some wild waves lately. You won't believe this. PLTR stock shot up more than 10%. Wondering why? Well, a Wall Street veteran analyst threw some positive vibes into the mix by initiating coverage. And guess what? The market's excitement only added fuel to the fire. Now, don't get too swept away just yet. While Wall Street seems to have a soft spot for Palantir, retail investors might want to take a beat. The company is set to drop its Q2 results on August 7, and although revenue is expected to flirt around $532 million, analysts are predicting a loss of 5 cents per share. So why are the analysts feeling the love? Well, Palantir snagged a sweet outperform rating and a 25% price target from the well-respected Dan Ives at Wedbush. He is super confident that Palantir is about to ride the AI industry's growth wave, leveraging its data expertise to whip up some killer AI solutions. And guess what else? Palantir recently danced into a new partnership with JD Power, a big shot in data analytics. This duo's mission? To jazz up the automotive industry with some serious insights using Palantir's nifty AI tricks. They're bringing the heat with repair analytics, EV battery health insights, and even an intelligent alert system for tracking vehicle sales. Now, before you rush in, a reality check is in order. Palantir has a whopping 53% ownership by retail investors, making them the real power players here. Institutions own 33%, and both sides took a hit when the market cap did a little dance down to a $31 billion last week. But guess who got hit harder? Yep, it was the retail investors. So what's the takeaway? Palantir's got potential for the long run, but it's not without its short-term roller coasters, especially as it drops those Q2 numbers. Retail investors might want to hold off before jumping all in. While the long term might be rosy, the short-term landscape could be a bit rocky. Analyst who bought Palantir stock under $10 has this to say about shares now. Lastly, before we end this video, let's talk about Palantir Technologies with ticker symbol pltr and a savvy move by analyst Stephen Guilfoyle. Back in April, when others were skeptical due to recession worries and government contract uncertainties, Guilfoyle saw a golden opportunity. He bought Palantir stock for Real Money Pro stocks under $10 portfolio just before the shares shot up thanks to strong earnings, a debt ceiling resolution, and AI spending hype. Guilfoyle's big bet was on Palantir's AI push, a market estimated to be worth up to $800 billion. And guess what? He nailed it. Palantir's move to roll out its own AI platform hit the sweet spot, especially in the wake of widespread AI interest after OpenAI's ChatGPT launch. Now, he's updated his thoughts on Palantir stock, and it's worth noting. Back in April, his target was $12, and now with the stock around $12, is he cashing out? Nope. Guilfoyle's been steadily raising his target, currently pegging it at $22. He's bullish on Palantir's solid balance sheet and AI potential. With Palantir set to release its Q2 earnings on August 7, Guilfoyle's optimism regarding the AI opportunity makes CEO Alex Karp's words during the earnings calls a must-listen. So, keep an ear out for some potentially exciting insights on the AI front from Palantir. And that's it. We hope you enjoyed this video. If you did, don't forget to hit like and subscribe to our channel for more updates. Thank you for joining us on this video, and we hope to see you in the next one.